In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus go over investor sentiment. And I'm going to quickly go over the investor sentiment first, then the technicals, then the economic calendar. But the economic calendar is going to be covered a little bit quickly in terms of the most important points. And then I'm going to go in details towards the end. Now, investor sentiment for the week of January 8th, it's at 34.7% bullish versus 37.4% bearish, which is kind of interesting because we've seen the bullish sentiment decreasing week after week, and it is lower than historical average. Historical average is at 37.5% bullish for the most part, and now it's at 34.7 right now, so lower than historical average. But then the bearish sentiment too as well is increasing week after week, increasing, plus higher than historical average. Again, 37.4% bearish right now, and historical average is 31%. Interesting, just because indications are kind of pointing to the downside. I was expecting them to potentially be a little bit of a drop and then at one point reverse the upside, but I'm gonna show you guys some stuff, and it's kind of interesting where it kind of shows strong downside personally. By the way, this is all my opinion, so please do own due diligence and research before buying and selling. But economic calendar first too as well, in terms of just the key stuff. We have the monthly U.S. federal budget on Monday. We have PPI inflation numbers on Tuesday. CPI inflation numbers on Wednesday. I'm going to go over them in detail soon, but just high level, and then go to technicals and then come back to this. And on Thursday, we have import price index, as well as initial jobless claims, and then on Friday as well as other stuff. But first, to get to the technicals and then go back to the details after. I'm going to go over ETF SPY, ETF for the S&P 500, same thing, just different ratio, and then ETF QQQ, ETF for the NASDAQ, same thing, just different ratio. Now, this is probably going to be a little bit important. So this is upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, and then we do have like two major drops, like crashes, dating back since 2010 as well. Now, I only have this just for visuals for the future, potentially, where if maybe one day we come down and this is the level we're going to bounce off of. It only has two data points, touch points, so technically it's not a legitimate trend line yet, technically, right? Now, in terms of the direction, so again, this ETF SPY, ETF for the S&P 500, if we look at the 1 year chart, MACD line is getting stronger to the downside. So this indicates if we're in a bearish or bullish movement. Currently in the bearish movement, plus we see volume increase in terms of selling. So it has increased volume, plus it's predominantly selling, which is unfortunate. I was hoping to potentially, when we go back up to the 50-day moving average of the 1 year chart, break through and stay above it, but it looks like it was coming down. Indications were still pointing down, to be fair, but I was hoping that it would be behind us, especially since we bounced off technically off the 100-day moving average. Now we're at the 100-day moving average right now. Can we bounce off it? We technically can. Personally, I'm optimistic for the new administration that's coming in. The only thing is, though, in terms of the economy, it's beneficial and all that stuff, but the problem is it's the other markets in terms of like NASDAQ and Dow Jones, they're showing strong downside. So I don't if you're looking at the indications, it does not look like this 100-day moving average will hold on the 1 year chart. That's the unfortunate part. Right now, S&P 500 is at $580.49. The 100-day moving average is at $580.56, and we'll see. Now, if we're looking at the 5 year chart, indications still showing strong downside. Again, volume increase, more to selling. We do have room to go to the downside technically, right? And then the all chart, it's getting dangerously low in terms of the curvature to the downside. Now, it doesn't necessarily mean we have to fully go down. For example, let me just minimize this right now. There was a period where we were about to drop down back in October 2023, which we did drop down, but we bounced off this. Remember, I stated upward trend resistance line dating back since 2010. Well, or support level, sorry, upward trend support level dating back since 2010. We actually did bounce off it, right? Which is nice. And it actually did not continue to the downside into the bearish momentum or movement, fully committed to the bearish movement. And then actually started going up and pretty much constantly just went up the whole entire time. The thing is, can we have the same thing? Potentially. Probably we would have to find out an actual trend line where it's going to bounce off of completely. But for the time being, curvature is getting scarily curved quite a bit. And if I show you the NASDAQ and the Dow Jones, it's pretty much pointing to more downside, which is strange because personally, I would think the markets would go up just given how the nature of everything should be moving forward. Again, with the new administration and all that stuff. The only thing is, though, if you look at the investor sentiment, they're becoming more bearish. If you're looking at the indications, potentially showing more downside. We're at levels we could bounce off of. We are relatively speaking, at those levels, but it's breaking quite a bit of important levels. For example, like I've shown in the last video, we had a downward trend resistance line. It's pretty much been staying underneath it. False breakout right about here. Thought potentially could have broke through, but quite a bit of drop right there. Massive red candle, right? And then we bounced off this upward trend support level quite a bit, a few times actually, plus the 50-day moving average on the one-year chart. I was thinking maybe because we bounced off it already, we could bounce off it again and then break through, but we came down, right? Nice red candle, you could argue. And now we're heading down to the 100-day moving average of the NASDAQ. This is NASDAQ, by the way. ETF QQQ, ETF for NASDAQ, same thing, just different ratio. And heading down to the 100-day moving average. Now, the current price of QQQ ETF is at $507.19, like $507.19. And then the 100-day moving average for the 2-year chart or 1-year chart is at $496.96. So $496.96. Will we get down to that level necessarily? No, not necessarily, but indications are still strong. So for example, again, 1-year chart, MACD line, stronger momentum to the downside, bearish movement. Volume has increased more predominantly on the sell side. If you go to a 5-year chart, crossed over to bearish movement. Again, increased volume, predominantly selling. And then the alt chart, curvature, yeah, pretty much same like S&P. So it depends. It's kind of strange because personally, I do not think this should be the direction of the market, but that's just my personal opinion. But indications are all pointing to the downside. That's the thing. So I don't know. It's up to you what you prefer. But again, like look at this. This is the Dow Jones, right? And we broke through the 100-day moving average. Insane red candle. Seems like it's heading down lower too. If you want to visually see what this is. Oh, by the way, the NASDAQ shows the same thing as the S&P, which I'll show one quick thing. Upward trend and resistance line dating back, I believe, since 2021. Yeah, 2021. Broke through it, bounced off it essentially. And the question is, are we going to head back down to it? Stuff like that. Now, the Dow Jones, before I get to the NASDAQ and show the 2010 thing, closed at 41,938 points. And again, this is the 1-year chart. MACD line, we solidified even more stronger downside. 5-year chart, bearish movement. Now, you could argue maybe heading over to the 50-day moving average or the 5-year chart, and maybe we'll bounce off of that level. And if that's the level you're thinking, that's roughly about 40,657 points, right? Now, these are moving averages. They obviously move day by day with price action points, but indications still, it's getting not necessarily scary, but to a point that it's like, okay, we might get decent amount of bearish momentum to the downside. Right now, it's early to call, I would say, but again, like all chart curvature to the downside as well. You got to be careful a little bit for the most part. Volatility index has increased as well, and it looks like it could be potentially increasing a little bit, quite a bit. I think 1-year chart, bullish movement, 5-year chart, bullish movement, and then alt chart, yeah. So if the volatility index goes high, technically more downside could be coming potentially. It depends on how you interpret that data. But now for the NASDAQ, like I stated, it was almost the same as the S&P. Upward trend resistance line dating back since 2010. Upward trend support level dating back since 2010. Did break through in 2020 to 2022. Came back underneath it. Now it did bounce off as support as well during the 2020 timeframe, I believe. Yeah, almost end of 2020. But came back underneath it, had issues passing it, a couple false breakouts, and then we did break through it. Let me zoom in right about here. Yeah, it did break through it. And now we're coming back underneath that 2010 level. That's the problem about this whole situation, because this 50-day moving average for the 1-year chart plus this upward trend support level / resistance level is first resistance, right? Again, this is the line right about here dating back since 2010. Mind you, the market was still going up. It doesn't mean it's not going up, right? Like from here, 2013 all the way to 2015, the market was still going up. It was just underneath that 2010 resistance level. It did bounce as a support again, like I said, in 2020. But if we come back underneath it, it becomes a challenge to pass it. It's not necessarily easy to pass it all the time. That's the problem. And hopefully that is not the case. Hopefully we somehow bounce off to the upside. Again, I don't necessarily see the case for being pulled down quite a bit, just because, again, personally, this is my opinion. I think the next administration is good for the economy, should pull up. And but we'll see. Only time will tell, right? Now, in terms of the economic calendar, just going to quickly go over it in terms of details. So for Monday, January 13th, 2025 at 2 p.m. Eastern Time, we have monthly U.S. federal budget. And previously it was 129 billion. This time around, they're expecting about 75 billion. This is for the month of December. Tuesday, January 14th, we have 6 a.m. NFIB optimism index for the month of December. At 8:30 a.m., we have the following. We have PPI, so producer price index, Core PPI, PPI year over year, and Core PPI year over year. Interesting enough, from the last Federal Reserve meeting, in terms of their points, They didn't say that they're going to drop interest rates that much in 2025. And then it's due to the fact that they're afraid of basically essentially the next administration in terms of the inflation numbers going up higher than they should with the next administration, basically. We'll see. So the reason why these inflation numbers usually help us to figure out if there's going to be more rate cuts in the future and all that stuff, it almost seems like they're kind of dismissing this right now and trying to see after the next admission comes in, then the data comes in, then they'll assess it fully. But we'll see. Now at 10 a.m. we have Kansas City Fed President Jeffrey Schmid speak. At 2 p.m. we have Fed Beige Book. At 3:05 p.m. we have New York Fed President Williams deliveries opening remarks. And then Wednesday, January 15th at 8:30 a.m. we have the following. We have Consumer Price Index for the month of December. Now, actually, I should have probably read some stuff. For the Tuesday, producer price index, previously 0.4. This time around, they're expecting 0.3. And then for the following, they would obviously expect to be lower, but they got 0.1 previously for Core PPI. And then Core PPI basically has the energy removed from it in terms of the inflation numbers, right? The inflation data points. So no energy including that data point. Now PPI year over year, 3.0 previously, again, expecting lower. And then Core PPI, but that was PPI, not Core PPI. And then Core PPI year over year was 3.5% previously. Now, in terms of Consumer Price Index, again, these are all coming out at 8:30. All of them are Consumer Price Index, basically the CPI year over year, Core CPI year over year, and then at 8:30 a.m. as well, I'll cover this Empire State Manufacturing Survey for the month of January. Now for the CPI for the month of December, previously it was 0.3. This time around they're expecting 0.3, so flat. 2.7 previously for the CPI year over year. This time around they're expecting an increase at 2.9. Core CPI previously was 0.3. This time around, they're expecting 0.2, so a slight decrease for that. And Core CPI year over year, 3.3 previously, and this time around 3.3. Now, in terms of 9 a.m. as well for the, what was it called? The Wednesday, for the Wednesday, January 15th, 9 a.m., we have Richmond Fed President Barkin speak. 11 a.m., we have New York Fed President Williams speak. 12 p.m., we have Chicago Fed President Goolsbee speak. And then on Thursday, January 16th, we have at 8:30 a.m. the following initial jobless claims for January 11th, previously 201,000. This time around, they're expecting 210. And then at continuation of 8:30, we have U.S. retail sales for the month of December, retail sales minus autos for the month of December, import price index all for the month of December, import price index minus fuel as well for December. And then we have Philadelphia Fed Manufacturing Survey for the month of January. Then at 10 a.m., we have business inventories as well as home builder confidence. And then on Friday, January 17th, we have 8:30 a.m. the following housing starts for the month of December, building permits for the month of December, and then 9:15 a.m. we have industrial production as well as capacity utilization. And that's basically it. It's going to be pretty decently jam-packed week, I would say, for the most part, give or take. And then again, interesting enough, investor sentiment being more bearish than bullish, by the way, again, right? And then historically average lower than the bullish sentiment, and then higher than the bearish sentiment, historical average, plus the market's indicating, or in terms of technicals, the charts are showing downside further. We'll see how this week will turn out. But that's basically it for today's video. I do upload these videos weekly, so if you want to be notified when I do, again, consider following and subscribing so you'll be notified when I do. Thanks again for watching. If you did find it beneficial, consider dropping a like. It helps out the channel. And then thanks again for watching. Take care. God bless and peace.